righty then. We are back, everybody. Welcome back to the morning show here on Stock Market TV. We had a bit of a one-day hiatus as we put on 12 hours of a chart summit, but the chart summit is in the rearview window, and it is the rearview mirror, whatever, I don't know. And we're back. So, what's on the docket for today? We have a lot to talk about. First off, we kind of have to cover like 2 days worth of stuff. We have to talk about what happened, overnight this morning, yesterday, and kind of like the day before that, right? So we had a lot going on this morning. Jeff Hirsch is our guest. He'll be on in about 13 minutes, give or take, and he's going to talk about his first ever, or I guess maybe the first ever, Bitcoin seasonality study that he just finished. So, what's the best month for buying Bitcoin? What's the worst month for buying Bitcoin? We're going to find out in a few minutes. Sean Mclaughlin will join us as well to talk about his options trade yesterday. And Kimmy Sokoloff will be here as always. I see you all in the chat. Good morning, good morning, good morning. No JC today, so it's a Spencer and Strazza show. You guys ready for that? I hope so. Uh-oh. Wait a minute. Are you on mute? Check yourself.
Yeah, I have to mute myself because I have these sneezing attacks. My allergies are just on the fritz today, so I'm coming and going.
It's not even allergy season. I guess for you it always is. I don't know.
It's a cat thing. Yeah.
It's a cat thing. Anyway, all right. Are you recovered? Are you rested from 12 hours of chart summit? No,
still running on adrenaline though. This is good. I mean, it's a big. We were not complaining about it, but talking about it yesterday, right? You more than anybody, and JC just in front of the screen all day at your desk. You were really emceeing the whole thing. That'll tire you out. JC had to go. Take a little vacation. I'm kidding. He's doing a family thing.
MVP to the wife for bringing me breakfast yesterday because I couldn't get up to go get food.
She probably had to bring you a porta potty too.
Well, it wasn't quite that bad, but close. Anyway, how you doing, man?
I'm doing good. It's good. So fun to put that on. I get so psyched up for it. So it is like a little bit like of a hangover.
Yeah.
After the event, for sure. But I think again, put on a great show. I mean, the first night itself was just killer. And then yesterday, whether it's Frank or Dietrich or Ari, I mean, the level of quality and the speakers and the content that's covered, I don't think you get that at any other conference. I really don't.
We've taken all the slides, all the presentations from yesterday. We've taken all the slides. We've compiled our favorite slides into a presentation. I don't think it's on the site yet, but it's going to be on the site. So if you haven't seen it, don't worry. It's going up. Should be today, and we'll send it out via email.
And already a couple questions, Spencer. Tell people like how can you rewatch? Like where do you go?
Yeah, so if you registered already, then you should have received an email last night with a link to rewatch the full 2 days worth of presentations. You can we have them uploaded in like full linear format and also sliced up by segment. So whatever, if you want to just look for one specific person or watch the whole thing, you can do that. If you haven't registered yet, it's okay. You still can. And it's still free, by the way. Just go to chartsummit.com, enter your email, and you'll get an email with the link to watch all the stuff. So that's how you do it, chartsummit.com. And there will be, in addition to the actual presentations, like I said, the slides will be there as well. We also sent out a survey last night, just a quick survey for some feedback.
Yeah, I didn't see it. What was the question?
Should I save the responses for like recess later or maybe tomorrow, and we can talk?
Was that me? Oh, I'm sorry. Hitting buttons over here. Let's do the survey responses for recess, right?
Yeah, save it for later. All right, we got a few minutes here before Jeff, so let's do some state of the markets.
And so we'll go through like the highlights. I guess tomorrow Fonz will join us, and me, you, and him will just kind of like work through what some of our favorite charts or themes or talking points were. So that'll be good.
Yep.
Also, just public announcement. the guests aren't stopping. I mean, we have all-star lineup coming up the next couple of days, so don't miss the morning show. We got this Chart Summit hangover. We got Jeff Hirsch today. We're talking about brand new study that he just put out. We got Meb Faber tomorrow. We got Brian Shannon Monday. They just keep coming.
A couple things in the chat. Sam asked if we're going to put it on YouTube because playback was slow for him.
No.
We're not going to put it on YouTube. It's on Vimeo. If you have the link, then just try going directly to the Vimeo link, like clicking on the little icon within the player. Go straight to Vimeo. And PJ says he started rewatching the event last night. So look at that.
All right, run this bumper. Let's do this state of the markets.
All right.
All right, we got to talk about these short-term tops, right? Let's start with the S&P RSI 14 chart. One thing that we know about strong and sustained bull markets is that momentum doesn't get oversold. And we measure momentum using the daily RSI 14, which is shown here in the lower pane. Spencer, it hit 30.06 the other day.
Is that oversold?
I mean, 600ths away from oversold. Does it count?
That's a great question.
and here's the answer. It's close enough, right?
Right.
It shouldn't. It speaks to the weakness in the underlying trend that we even got that close, right? In really strong bull markets, rally phases will get you overbought 70, 75, even 80. And then the corrective phases dip down to maybe 40. The strongest trends won't even break 50 on those corrective phases. The fact that RSI even got close to 30 at the index level is no bueno, right? And not every oversold reading is the same, right? This one is not as bad as if we spike down to 25 or the low 20s, right? So again, does it stand out? Totally. Am I looking at this maybe kind of oversold reading and saying, that's it, bull market's over? I got a question like that yesterday, and it's a great question. No, right? I wish it was that simple, but it's not. Let's go back to the price chart now with the VWAPs on the S&P 500. This is the situation. So over any tactical time frame, it's a little spooky, right? This would suggest more caution is necessary, but I want to echo the sentiment from one of our great speakers yesterday, Frank Capilleri. He's my pattern guy. He was up here saying, in bull markets, bullish patterns tend to work. And in bear markets, bullish patterns maybe don't tend to work. Likewise, during bull markets, bearish patterns might not work that well, right? So this is a bearish pattern in the context of an uptrend. So I think what Frank was insinuating was patterns fail all the time. Maybe this one has a higher likelihood of failing due to the underlying trend. What do you think about that?
You know what? I thought it was funny hearing multiple different people try to label or characterize what kind of market this is, and are we we're in a bull market just with a little bit of a hiccup, or is this a start of a turn, or is this even a bear market? I thought hearing different perspectives on that was interesting yesterday. Trying to put a label on what this is exactly. I think labels can be sort of overrated. I think the bottom line is it's whatever the price is the law, right? The price is the truth is what we always talk about. So the bottom line is market's been weak within a longer uptrend, right? And that's
I'll label it for you.
Okay.
The NASDAQ 100 had a record-breaking first 6 months of the year, up 45%.
Yeah.
We are currently in an 8% drawdown. And guess what? We had a similar 8% drawdown in February before going on to
you know what? Honestly, I don't even remember that.
Right. That's my point.
Okay? I don't even remember that.
JC hates it when I say garden variety. All that means is it's just standard stuff, right? This is ordinary course of markets. The way we would do something like this, I don't know if do I have one that shows the fib from the lows, Fonz? Maybe mark it up quick. Just showing the 2023 advance fibbed out for something like the NASDAQ, because that would show you that we're not even back to the 38%, right? We haven't even retraced like the first Fibonacci.
Also, let's not forget, everyone And their mother said going into this month, "Oh, did you know September is the weakest month of the year?" Right? Okay, so now we just lived it.
Right.
We
And
just
it's
lived. We just lived it. So that's
um,
normal, right? Now,
well,
although even Jeff Hirsch, the man himself, did say even he was concerned.
it's
And
eerie. You said eerie about how tight seasonals have been, right?
I interpreted it as mild concern on his part. Maybe we'll find out in a few minutes. Mild concern, just how closely this market was lining up to historical seasonality patterns. So,
Yeah. And
I mean, damn, if he's saying that, then yeah,
nothing should work that good.
right.
Uh, Essex Trading, Sean will be on later. We'll ask him about Google. I don't know. I've been busy. I'm still long. Throw up the NASDAQ. Throw up the Q. Okay. Oh, yeah. This is great. No. Yeah. Thanks, Fonz. So we're not even there yet, right? If we measure it out, do this for any of the indexes, and we look at the 38% as this would be a logical support level for us to retrace to on corrective action. We're not there yet. Okay. So while this short-term top is a little bit spooky, you can draw trend lines and show them being violated. If you throw up the NASDAQ, fine. Really ain't seen nothing yet, right? So my question that I'm asking myself, I know we talk about the classic non-tops on here all the time. Is this just a failed top? If you look at something like the NASDAQ, I know yesterday's price action wasn't super bullish, but we dug in a little bit at these pivot lows, right? The NASDAQ looks like it's not going to make this easy for the bears, right? So maybe this thing just reverses here and this top doesn't print at all. Then you're going to see a situation where the S&P 500 is scooping and scoring a little bit, and what looks like a completed top turns into a failed top, and you get some sort of like a failed breakdown type of fast move higher. And if you look at the strongest indexes, whether it's XLK or the NASDAQ, not oversold. You look at something like industrials, yes, oversold. And let's just talk really quickly about the laggards, right? We're focusing on some of these leadership indexes during periods of weakness, periods of corrective action. Look to the weakest index, look to the laggards because they will lead to the downside. They will break down first, right? And then that will be a warning sign of things to come for the stronger indexes or the not lagging indexes, at least, right? So micro caps are really the worst of the worst from a size perspective, right? Small caps are bad, micros are worse. Already back at the range lows, look like they want to break, right? So if you get some, swoosh move, collapse lower in micro caps, you better believe small caps are going to revisit those lower bounds. And I think Ari was the one who was kind of pounding the table on how important these pivot lows, and even if you zoom out, they kind of correspond with some prior cycle highs in IWM, the Russell 2000. That level can't go. We're watching that very closely. And if we're talking about laggards, how can I leave out real estate? I mean, these stocks are just so bad. I think there's a problem when it comes to rising rates and pressure on these real estate companies, similar to the banks, namely the regional banks throw up real estate. Those are banks. Yeah. Big top here. This looks like it's going, right? So watch the weakest groups, watch the micro caps, watch the small caps, watch real estate. These things keep weakening, right? And this is some sort of completed head and shoulders top here. What are the strongest indexes doing? Are they following lower? We'll have to wait and see. Throw up the banks quick too. I think that's an important one. Banks are breaking their VWAP. We talked about the art of anchoring with Brian Shannon. We'll talk more about this on Monday, but we talked about it, Wednesday night, Tuesday night, right?
Yep.
Breaking this key VWAP that I've anchored from called the First Republic lows, right? Those are
Sure. Yeah, we'll call it that. We'll call it that.
the blow up lows. That was the second round of blow ups in May. We had the first round in March with Silicon Valley and some others. So that was the year to date low for the banks too, right? And anybody who bought or got long banks on that weakness was in a gain position up until just, I guess, late last week, early this week, right? So back below the VWAP, that tells us that the average participant is now underwater on these trades and that sellers are now in control. So sellers taking control of the weakest groups while the strongest groups are trying to hold up. So things are kind of mixed. Let's continue to monitor these charts. And I think we'll get an answer at least on these short-term tops by the end of this week, right? If the S&P is going to come out here and repair the damage, it happens today and tomorrow. So we'll know soon. That's all I got.
When you brought up, I forget when you first brought up the microcaps chart. Maybe even last week. I don't look at that index hardly ever,
Yeah.
because it's microcaps. But that blew me away to see that underperformance.
Terrible. These
Although,
stocks have been bad.
although full disclosure, I don't know what microcaps historically do compared to the other small mid large mega whatever. I don't know how those relationships are, but just to see that chart is like sometimes an ugly chart just like takes your breath away. That one I was like, whoa, took my breath away.
Look, we do this all the time where we use like the weakest groups and we look to the laggards, right? And this one is a real laggard. If you look at something like the S&P or the NASDAQ tried to get back to its old all-time highs. Meanwhile, microcaps couldn't get off the ground. They haven't been able to do anything. So it is a concern. Again, a lot of people will tell you it's a super bifurcated market. Again, I'll go back to Ari talking about how large and megas are one conversation and the smalls and the micros are a completely different conversation. We tried to make him pick his favorites in technology, right? And I thought his answer was great. Rather than talk about one subgroup or another subgroup, he said, I don't care if it's software, semis, internet. I like the big ones. I don't like the little ones.
Yeah.
And that was great. It's so simple, but I think that really is the right way to look at it. Essex Trading, talking about, I don't know if this is a hedge or just some short exposure, but that's the right way, right? You're doing the right thing. If you're gonna go out here and look for shorts in the case of some sort of much deeper and more severe correction from here and these short-term tops completing, short the weakest ones, short the micros, short the banks, short the real estate companies, right? So I like that strategy. That's great.
All right, our next guest says that small cap season's coming up soon. So let's bring him on, Jeff Hirsch, the editor, the author of the Stock Traders Almanac, and let's talk seasonality. You ready?
Does he even need an introduction anymore? We talk about him enough.
All right, fine. This next guest needs no introduction.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Morning.
Hey, Jeff.
Can you hear me?
Oh, yeah.
We're over here complaining about our busy day. You're not just on Chart Summit. You're doing your own thing. You're over here on Twitter Spaces. You're everywhere. How do you sleep?
I do.
Yeah.
I have dinner with my family, and I read a book that has nothing to do with the market, and I try to wind down a little bit, And I went on a big hike yesterday. A little Parliament program.
What book?
Yeah, what are you reading these days?
I am in the midst of a little something from the Outlanders series. I've got a Follett, Ken Follett book that he just put out that is on my radar. Just something, a little historical fiction.
Yeah. Can't go wrong.
I read Outlive a little while ago too, which is all about health and that kind of stuff.
That's nice. That's a Perlman book. That's on the Perlman book.
I actually gifted him a copy, I believe.
Oh, okay.
It was something that Hugh Jackman was putting out there that my wife heard about as I was working on my health and fitness, and she said I should check it out. They talk about a lot of protein, the most important macronutrient. So about Perlman's program.
Yeah, if it's good enough for Hugh Jackman, it's good enough for me.
Yeah.
So listen, we talk about. I feel like we have dropped your name more than any other technician's name over the past few years. And that's probably true for a lot of people because these seasonals have been spot on. It's been some of the best evidence that we've had to kind of gauge where we go from here and the strength or weakness of these trends. What do you think?
It scares me, Steve. I said it yesterday at Chart Summit, I think, and I've been getting that, there's an old walking on water indicator sign that we had in my father's office back in the day. So when everything's going your way, and all your systems are working, you got to check yourself. So you and I have been talking for the past couple of years, since the end of the pandemic, 21, 22, 23 so far, firing on all pistons for the 4-year cycle and seasonals. It's been making my life easy. It's really gelling, and as it continues to track, it's stickiness there. When it breaks away, maybe we get another year of this. Maybe the sitting president pattern works, but I mean, it sure is setting up right now. And when it does, let's take advantage of it, and overlay with some other technicals and some other observations from what we look at.
So you break down these cycles. We're looking at pre-election years, 4-year election cycles, right? A lot of political stuff, right? So I'm going to ask a question that I probably know the answer to, but a lot of people are probably wondering. We got Republican debate on yesterday. We're getting into election season. We're going to hear more and more about it. Does this have anything at all to do with one party or the other? Are you looking into that at all, or talk to us about that?
We always look into it. I mean, I'm a conscientious citizen. I held public office briefly locally as a trustee. I care, but the cycle has little to do with the party that's in power or the office. Yes, there's, the Republicans are better for the market. Not really. It's Republican Congresses. We've looked at the political alignment stuff. There's a whole page in the book shows the best combination is Republican Congresses and Democratic presidents. You get that old school compromise that we're all clamoring for.
That's government that we always hear about, right? More certainty.
Again? There's
more certainty when there's a split government because nothing really changes. Is that?
I don't know if it's not necessarily nothing. Is that you get to to the center. You get a compromise when you've got people that are working together. And you have a more conservative party controlling the purse strings and a more progressive party trying to push, the future and innovation. Anyway, point being, it's about certainty, which is what I think you just mentioned there. And the power of the sitting president running for office is a perfect example of, how the government manipulates the economy to stay in power and why the cycle works, because you've got somebody who's trying to keep them or their own power, or their own party in power, more powerful when they're running themselves. S&P's up in election years 12.8% when there's a sitting president running, and then versus an open field, which means there's nobody who's in office running for re-election.
Got it.
So there's a wide open, convention on both parties, and S&P down minus 1.5%.
Wow,
so,
big difference. Big difference.
They're not crypto numbers, but which we'll have to get into in a second. But the point is that you've got a good chance that the civic, financial, economic policies and agendas will stay in place, so Wall Street knows where to lay its bets. When you don't know, the market tends to be leery and waits to see what's going to happen.
All right, so you're an expert. You guys have been doing this for what, 57 years for the stock market. Now you're taking that skill set and you're applying it to a brand new asset class. What do we have now? 12 years, 13 years of
13.
price. Tell me exactly what you and Adrian did here. So Jeff just put out a brand new study. I'm so excited to have it in front of me. I tried to listen to your spaces yesterday. I'll be honest, I didn't really get a chance to catch most of it. So let's just break it all down here.
Yeah.
What do you do with this Bitcoin seasonality report?
Well, I embarked on this journey begrudgingly. Because I'm a skeptic. While I'm okay with single example analog comparisons for years, it's still a very new asset, and it doesn't lend itself to study so easily. But Adrian is a mensch, CMT, patient, great guy. Learned a little bit about social media marketing with him, which was fun, and it's exciting. But if it was with other people, it might not have worked. I mean, you and I could have done it, but he's because you're thoughtful, but he's a guru and well known in that space. So
totally.
We met at the CMT symposium in the city. I think it was at Brian Shannon's book party initially.
Yep.
And I didn't know he was a big Almanac fan and had been using it, and we just started talking and got along. And then we did have some struggles with the data set. The whole 24/7, 365 trading of these assets makes it difficult to lay down a benchmark or a goalpost. Is like, what is the close for any given day? Is it okay, let's pick midnight Central European time, midnight Eastern time, Greenwich Mean Time. What?
There's still no standard on that. It's something we debated a lot. I don't know how much it really matters if you're just looking at candles, but for a seasonality study, you need an answer. We tend to go with the Greenwich time. I don't know why. What did you guys do?
I'm open. I mean, I'm a New York guy. I'm a Wall Street close kind of guy. So I have noticed. Oh, there we go. I don't even have to bring up my own charts. You guys have them.
We got all the charts. Anything you want to speak to, we'll throw it up.
So I have a data source. It's a little elusive. Bitstamp, I think, is something that we're going to look at. Yep. I'm open to Greenwich time, but I've noticed recently that Bitcoin, it does track the stock cycles a lot, and I'm noticing similar action in the pre-market hours, where it looks like it's up early, and then during the day, like yesterday, you see it sell off. But we're in a bit of a correction trend, so that's also impacting it. So this is my favorite way to look at things. Honestly, these 1-year seasonal patterns broken down into different time frames.
And why did you bucket the years by 2011 to 17, and then break out 18 to 2022?
Well, the big date that occurred was when the CME started trading futures in 2017. I think it was December, if memory serves. So you got 2010. The data, most of it starts in July 2010. So you've got a partial year. So we've got all years going back to July 10th or 9th, whatever it was, when the data started being tracked through the present. And then 2011, the first full year through the last full year before the future started, and then the year since then, and then the current year. So that's the big rationale when there was some institutional and Wall Street or Chicago acceptance, futures acceptance of the asset.
Got it.
So I mean, look at the numbers on the left side. It's just you got to take that with a little bit of.
Jeff's saying, look at the percent change here.
I mean, it says 2,000 at the top.
So
that's like you want to throw the flag. It's like, come on.
So we had this monster melt up that you just mentioned in like Thanksgiving through early winter in 2018. So like late 2017, and you could see it right here in blue. I mean, I know that's only 1 year, but does that happen a lot? Because it sure looks that way. Even if you do the composite or the aggregate with all years, you get this huge ramp up.
Well, I mean, it is Q4. It is the Q4 magic. I mean, turn to your prayer book at the left side, the Stock Traders Almanac. I don't know if you keep yours as close as I do, but there's a whole thing about fourth quarters in here.
So this kind of tells me, when I look at this, Jeff, I think, is Bitcoin just another stock? Because this looks rather similar.
Yeah. Jeff, is that what you're saying?
Beta with a huge alpha. Wow. I mean, or whatever you want to. It's like it really tracks, and one of the comparisons that Adrian made and that we made is it really tracks Nasdaq. It's like a 4x Nasdaq deviation.
It's a software stock or an internet stock. Yep.
Or an old Vancouver mining stock or a biotech stock. Or I mean, I heard you mention micro caps before, and I used to roll in that area, but that was one of Dad's favorites. But anyway, go on.
So that's a big takeaway, that maybe Bitcoin is just a lot like other risk assets, particularly the riskiest ones in the stock market. What were some of the other kind of like big takeaways or big conclusions from this study?
I mean, the thing that I learned was this whole halving cycle, which is kind of like the 4-year cycle, but not exact. Where we have the presidential election on the same day every 4 years. This halving thing is roughly 4 years, and I've seen the date, the projection move. A couple of weeks since we were looking at it, but this pattern that you see, this sort of like fade into the halving, I think it is, which I don't know if you know what that is.
Yes,
they cut the mining fee in half every 210 blocks in the blockchain.
Right. Okay.
It's like built.
But aren't we just looking at price? Like, sure, the halving's going on. Things are always going on in markets. We're just studying price here.
This is what creates this sort of 4-year cycle.
Got it.
For Bitcoin, different than the election cycle. Then what we've seen is that after these halvings, there have been these big rallies, and it's never returned back to that halving level. There it is.
Got it. Yep. Bitcoin seems to never break its prior cycle highs
or lows.
Yeah.
It's pretty cool. And nice job by my collaborator here on on the different events at the bottom. If you can see that, I mean,
yeah, this is great.
and then when you have the El Salvador, he's gotten bold, sort of, introduced it as being, currency. It's kind of interesting. There's some other things I want to work on with this, with the data and getting a better source. This is actually the brave new coin that he used for that chart because it was easy to make that illustration.
Right. Go back to the throw up the cumulative seasonal, Spencer. People always talk about this Bitcoin winter, Jeff. Shouldn't they be concerned about the Bitcoin summer based on these charts?
Yeah, the Bitcoin winners. I mean, it tracks the seasonals. I mean, we buy in some. Remember September for Bitcoin. I mean, here we are. Last couple of trading days in September. I haven't looked since it looked kind of flat this morning, or it was up overnight. But it's setting up again. I think last year we didn't have the same kind of setup. I think we were suffering from the overall, global bear market.
So I'm not a huge math nerd, but wouldn't we be able to normalize the beta on Bitcoin back to a level that's consistent with stocks and overlay maybe the black line here all years with the stock market seasonal analog? And how close would it be? Have you done that?
I mean, I think in my slide deck, there's a chart that shows the S&P going back to 1950 and 88, as well as 1901, or the Dow, excuse me. So we can look at that. I mean, just from memory, it looks pretty damn similar. I have it here. Where's my hat? I should get my hat, that I was wearing out of Future Proof. It's got the chart right on there.
Yeah. Oh, here we go.
Well, this is the 4-year cycle one. This is great. This is a little scary that it's so close. I mean, the solid lines here are the current, cycle. 21 through 23, and the dotted lines are the full 4 years cycles going back, to a 49. But for NASDAQ, it's the 71. So,
I want to ask you about this one. You say September is the season of Bitcoin. Now you tell me it's the 28th.
Why? It's a perfect opportunity, Spencer. You have lots of time.
Right, so walk us through this chart here. So this is just showing the average performance by day of the month.
And here's the 24/7 365 thing. This chart has all 30 days of September, whereas all of the monthly charts that I have been using for whatever years are trading days. But now that Bitcoin trades on Christmas,
that's a good point.
So it's a little different animal, and we don't have more than 13 years to really examine that. And I think the first 2 or 3 or 5 might be, kind of being, able to cut off, because I don't know if it really represents anything other than just pure speculative hype and not behavioral, finance and how people are trading it on a regular basis. That was just initial, like an IPO type of thing. So here is just, the average month is in the black dotted line. That's all months. That's kind of like the monthly cash flows out of the back of the Almanac. And then the blue line is the average September. You can see that low. This was kind of the impetus for us releasing it at this point, that we kind of did it on the day of the sort of seasonal annual low for Bitcoin on September 26th.
Nice.
And the red line is the current one. That's a couple of days behind when we put it together last week. But here we are, sort of just tracking this pattern. Last couple of days from memory, we've had a little more weakness, so I think we're even closer to that. But go ahead.
You would think that Bitcoin would track traditional seasonal patterns more closely because there were no like fundamentals to get in the way, right? There's nothing else to distract from just the pattern.
Yeah, it's purely technical.
I mean,
right.
I think fundamentals follow seasonal behavior anyway. I think we're all a bunch of creatures of habit, and collectively, what institutions do, is calendar based and seasonal based as well. But we look at fundamentals, and I think you have a point there. But there's been a lot of wild and crazy technical analysis on this stuff too, with intraday stuff. But here we are seeing people treat this asset class very similar to other asset classes, just with a bit more amplitude,
Technical analysis works great on crypto. It really does. Maybe because there is less noise with the fundamentals, less going on, less to analyze, less to overthink. Maybe people rely more on technicals, and then it becomes like a self-fulfilling thing. Don't let JC hear that. But tough question for you now, Jeff. Are you a believer? Or are you just doing this study for fun? Or do you own Bitcoin? Are you long Bitcoin? Are you buying these seasonal lows in Bitcoin? What do we do with this information? What are you doing?
I am looking to buy these seasonal lows.
Awesome.
I wouldn't be calling myself a believer. I'm not a skeptic anymore. I'm gonna become a believer or a disbeliever by actually, at the old Yiddish phrase, "Took us off and tish." You got to put your wallet on the table. So I'm gonna dip in. I'm looking for an opportunity. Probably gonna use a little MACD maybe, just for an entry like we do with the best months.
That's right.
But also just putting my trading hat on here at the end of September and looking at some of the other assets out there. I mean, Grayscale looks pretty interesting as an easy way. I like ETF, so I might go that route. GBTC.
Listen, the GBTC is I think still a great vehicle. Is there still a massive discount there? I know it's been.
I don't think so. I don't think it's as massissive. But
there was huge ARB there. If you got long that thing before all these court rulings, that discount I think has really been squeezed.
I think the gap is closed. And
that trade's crowded.
What's that?
That trade is crowded. Yeah.
Everybody knows about it now. But that was a great ARB. If you had
the people knew about it 3 years ago. Yeah.
Nobody was doing it, but it's a discount.
But it correlates Bitcoin very closely, which is all that matters for me when I trade my ETFs with the sectors in the market. It's got to correlate with the underlying, and it does.
Yep.
So I remember, if I could just tell a quick story before Spencer kicks you out. This time last year, I believe it was actually the last week of October, I'm hanging out with Jeff Hirsch at the Money Show in Orlando. It was like Halloween. Yeah. That Spook Fest at Universal, which was a blast. And Jeff's like, we got the MACD crossover, buying the diamonds, long Dow.
Yep.
So, and that was like a year ago now. That was like two weeks after the lows at the index level for like the S&P. Ended up a great trade. What are we doing this year, this fall?
It doesn't really change all that much, Steve. It's setting up again. I mean, and it wasn't just the diamonds; it was the spiders and the cubes and the IWMs.
Yep.
And we had our sell signal in April for Dow and S&P, and for Nasdaq, the best 8 months. We were out June 22nd, which was an even better seasonal sell.
Yeah.
So we shifted into some of the bond ETFs. That's where I sit right now with my portfolio. And I am anxiously awaiting the next MACD buy signal, which is, again, setting up perfectly, or quite well. And we start looking for that crossover October 1st, first trade of October, and we want to see it confirmed on all three indices.
So what Jeff's saying, explain this process for everybody. He's not just saying, oh, it's October, it's time to buy stocks. No, the seasonals. That's the context for your decision, but you're waiting for confirmation, and I think you use the MACD crossover to do that, right?
Yeah, I think there's a chart in my slides. If you have them, you want to throw it up there where it's got the
the chart summit slides. Yeah,
the chart summit slides. It's got the my trade navigator chart of the S&P and the Nasdaq with the crossover buy signals of the last and sell signals the last couple of years.
I don't think we have that one handy.
No, it's okay. People can reach out.
Yeah. Too many charts, Jeff.
Too many charts.
All right.
Chart.
That's too many. That's right. Overload. All right, Jeff Hirsch, Stock Traders Almanac. I did drop the link to the Bitcoin study in the chat. So check it out if you're interested. And Jeff, always a pleasure, man.
Thanks, Jeff.
As well.
All righty.
Take it easy, fellas.
Biggest takeaway for me is if you are still in the Bitcoin as a hedge camp, I don't know how much more evidence you need that is not true.
Well, inflation's ticking higher again, so hedge away. Go get your Bitcoins.
Or have at it. So, one hole. Can you tax harvest losses with crypto? That's a question for a financial advisor or an accountant.
Yes.
You can? I don't know. I have no idea.
If you're buying vehicles,
if you're buying like an equity vehicle, sure, but if you're buying like on a crypto exchange, I have no idea.
I think they're being treated like securities for tax purposes, so I would think so. All right,
ask an accountant. I don't know. Okay, we'll have Kimmy hop on in a few minutes, but we got a lot of movers, a lot of news to talk about here, Strazza.
Do we?
Oh yeah, I got like 10 things on my list here. We're not gonna get to all of them.
Do we have time to hit a few now, or are you gonna
Yeah.
go Kimmy? All right.
Yep. Okay. In no particular order. Let's just do this. We'll work through a few of these quickly. GameStop, Ryan Cohen, CEO, officially as of this morning. So he wasn't. I think before he was the chairman, exec chairman. Now he's also the CEO. So whatever. Stock is up on that news, as you'd expect it to be.
Ryan Cohen is back at the helm of GameStop.
Well, he was already at the helm in a weird way. Your camera's off, by the way. There we go. He was already at the helm, but he wasn't CEO, and I guess now he's CEO and the exec chairman. So anyway, GameStop, but in my unprofessional opinion, resistance at 20. GameStop.
Is this stock gonna catch a bid simply because of the release of this movie? Is that what's going on here?
No.
You don't think so?
Well, no, I don't think so.
We've seen dumber things happen with the price action of GME.
Yeah, but nobody saw the dumb thing coming except for like one guy, right? And even he didn't even see it coming. So, I don't know. Okay, this is interesting. Peloton is a big gainer this morning. What is it up now? Peloton is up. Only 10%. I thought it was more. So this is interesting, though. This is interesting. Okay. Peloton and Lululemon announced a 5-year strategic global partnership. Basically, Peloton will be the exclusive fitness content provider for Lulu, and Lulu will be the primary athletic apparel provider to Peloton. Now, the obvious question here to be asked, is this laying the groundwork for a takeover down the line? Peloton's okay. Hold on a second. Peloton's worth what? A $2 billion? Lulu's worth what, like $50 billion?
Dude, here's the problem. They blew it. Their reputation is now destroyed. Back in 2022, when they saw this thing coming from a million miles away with rates starting to rise, they should have been out there shopping themselves for a deal. It's too late now. Nobody wants this. This company's a disaster. I'm surprised Lulu even wants their name in the same sentence as these guys.
Wow.
This is words. Dude, anybody can make an exercise bike. Give me a break. And what does that mean? If you wear Lululemon clothes, you have to ride a Peloton?
No. It means if you're a Peloton customer, you'll get access to Lulu stuff. And then if you're a Lulu customer, you'll get access to Peloton stuff.
Do I have to be a Peloton customer to go buy Lululemon pants? This makes no sense. It makes no sense.
It's a partnership, but it's not about the partnership. It's about the implication. The implication of the partnership is here's Peloton partnering with a much bigger fish. Maybe sowing the seeds, fast forward a few years. I'm just asking questions. I don't know.
They could buy their assets in bankruptcy court in a year.
Okay. All righty. What else did I have here? We have a chart on Micron, right? They had earnings this morning. So we'll do Micron and then we'll get Kimmy on and then I'll get to the rest of these headlines. Because like I said, there are a lot. Micron had earnings. Was it last night? Yes. This morning? I don't even know.
Down.
What?
Down 3%.
Yeah. Okay. So that's all I need to know. Forget the numbers. Numbers aren't important. Down 3%. That's what matters.
Listen, it's a tough tape for semis, right? This doesn't even seem like a reaction at all. It looks like the other semiconductor stocks.
That's true. Actually, it does. Pretty muted reaction, even though, they reported they said they're going to lose money this quarter. And, well, no, they lost money last quarter too. Okay. Interesting.
This goes back to my conversation with JC from the other day. Semiconductor stocks are so cyclical. They will go through like ebbs and flows in their business cycle where all of a sudden they could turn negative for a quarter. Software, to the secular nature of their business, doesn't happen. Very steady, right? And a lot of investors like that. That's a big difference between these two tech subgroups.
Yep. All right, I got a few more headlines, but let's do that after. Kimmy's here, and she had a busy day yesterday. Let's find out what she traded.
Do it. I'm going to get my coffee.
What up, Kimmy?
Where's JC today?
That's a great question, isn't it? JC is in a car. Although he did say maybe he can call in. He's in a car on the way to Boston right now. So yes, he's abandoned us for the rest of the week, but that's okay. The show must go on. I have to admit, I was surprised. I don't know what I expected, but I expected one or two trades yesterday. You had 5 trades, 6 trades yesterday. 6 trades yesterday. Well,
I don't even remember.
you had what? You had 2 SPY trades, I think.
Yes.
And yeah,
I came in lower on it. So actually, before I came on Chart Summit yesterday, so I put on a SPY trade. I stopped out because it was heading lower, and I was waiting. There's a gap I've been talking about in the SPYs that I was looking for to get filled at 422.92. So I put a buy order in right before Chart Summit, which was like 145. I put a buy order in at 422.94. I got filled, and then I had a sale for a buck higher at 423.94. It did go higher, but I kind of got filled when I was done with Chart Summit. So it kind of worked out. And actually, I think one person in the room did take the trade, and he held it longer for a couple of points, but I kind of was like, whoops, all right, I got filled. So it was nice to come back. I was a little bit more aggressive on the lower print versus the one I took higher, just because I said, okay, I'm kind of bottom fishing, gap filled, it pushed a little lower than that 422.92 and then ripped back up.
How long time wise are you typically in one of your trades? Day trades, not the swing trades.
Oh no, I don't know. I mean, I could be into it. Depends to 12 o'clock. I'm looking for a target or a certain move in it. So I mean, it just depends.
Yep.
And today it's what we had: GDP, continuing claims. We had some data at 8:30. The indices did pop. The SPYs were back at like 427.50, but now I think we're back at 425.50, like back to the support zone. We're back at 425.50. We do have support in here. It's a tough one today. Yeah,
you said not much interests you, but you are watching ExxonMobil. What about that?
I am watching ExxonMobil, but it's already pulling in. It was up at 120, 30, 40 when I wrote my note, and now it's like 119 or 120.
That was like an
hour
ago.
I have to see the way everything trades. Maybe we still get that push like we did yesterday. Yesterday was a lot of short covering. It just went woof. The market popped, right?
Yep.
So, it's a little bit of a tough day. Hi, Diaz.
Did Kimmy release her technical analysis book list? No, I don't realize Kimmy had a book list.
I don't. I can't write. I'm the worst writer. Thank God.
No, but books that you've read.
That I've read. Oh my God. Well, being a CMT, I've read so many technical analysis books.
Yeah, but
wrong.
you never published like a list anywhere of all your favorite books, have you? I don't think so. Maybe we should do that. We should get Kimmy's list.
Books are wonderful and they're great to read, and you should read them.
Yeah.
The problem is it's not going to teach you how to trade. So when
screen
people
time.
say what helps me trade, screen time.
Yep.
And if you want to learn, you could start by paper trading, but then you got to put it live, right? And then you got to take the shot. And I always say to people, you start small, whether it's 1 share, 5 shares, 10 shares, whatever is small to you, and be consistent at what you do. So you want to be consistent in your methodology, your stops, your entries, your exits, and what you're looking for. And once you're consistent, you start to get like an ebb and flow, then you could start increasing your shares, and work in that level.
That's it. There's no substitute for screen time. All right, guys, if you want to get Kimmy's trades live as she's making them in her room. There's the link. Check it out. Kimmy, go get them.
Have a good day.
All right. Okay, 9:20 here. We're going to have options Sean Mclaughlin come on in a little bit, talk about his trade from yesterday. Let's go back to my headlines, though, because like I said, I have a lot. I didn't even get to the biggest movers of the day.
Hold on, Spence. Before we do, on yesterday's headline, can I rant quickly?
Which one?
On Target.
Oh, yeah, sure.
So yesterday was a long day. I'm like, oh, this is great. Chart Summit's over. I always have the news on in the background. I hear bits and pieces. If I like it, I'll turn it up, right? So Kramer's on. He's usually on at 6 o'clock in my house. What a disservice he just did. Listen, I'm not some sort of California fanboy. California is an utter disaster of a state, and it's always been, okay? And it's gotten a lot worse. But he comes on mad money and starts talking about, I was at a Target in San Francisco a few months ago. People were stealing things right in front of me. I'm calling Brian Cornell. It's not safe. Telling him
he said that. He said that.
Insane. Absolutely insane. Talking about how dangerous California is and these stores have to close. It's not safe for the employee. You don't need that. Okay. I was in San Francisco a few months ago. It's lovely. I understand that there are huge problems there. I was there last year too for a couple of days. Love it. Beautiful city. I hope they figure it out. The last thing you need is Kramer coming on talking about how dangerous this is and you can't do business there. That's not how we fix. I just thought it was disgusting. I couldn't believe it. But he was ultimately backing up their decision to close these stores and saying absolutely necessary. These stores were, a hazard, a safety hazard for employees and shop.
You could choose to believe that they're closing stores because they're having theft issues, or you can look at all of the retailers that are closing stores in major cities. Wink, wink, Nordstrom, who just closed their flagship store in San Francisco. By the way, okay, that was like a 4-story store in a mall. I've been there; it's huge. So yeah, it's not just Target. Okay, it's all retailers, cities. People moved out of cities. Breaking news, right? More at 11. So
how do they fix this? Like, how do they fix this? Stores need to be able to open and operate in these West Coast cities. I don't know, man. But it seems like I thought COVID might have been like the ultimate low for that. It's only getting worse.
Well, it's a commercial real estate issue, is what it is, right? That's the issue. Commercial real estate. People haven't come back yet. I've been wondering for a while now how these economies that thrive, that operate on the business class, how are they surviving? How the whole ecosystem? Think about all the lunch spots that relied on people, going for lunch during the workday. At 50% capacity, you just lost more than half your customers. I don't know, man. I've been wondering how do these people survive? I don't know. But
Rachel says, "Does Bitcoin fix this?" No, but Florida's open for business. You could come here if you feel unsafe out there.
Sure. Okay. Back to the headlines here. So, big loser of the day. Two big ones: CarMax and Workday. KMX, they had earnings. This is the reason they're down. Breaking news: it's not just houses that are getting more expensive. It's cars that are also getting more expensive. Their numbers came in below estimates as well. Unit sales down 7.4% year over year. Wholesale units down 11% year over year.
Are cars still getting more expensive? Like, I know it was a huge issue where the prices of used cars were catching up to the prices of new cars, but that trend is kind of reversed a bit. No,
I don't believe so. I think cars are still. Granted, I haven't bought a new car, and I'm not, nor am I in the market for one. But everything I've read is new cars are getting more and more expensive. I mean, yes, Tesla just lowered their prices, but by and large, new cars and people are having to finance at crazy interest rates, and but they've been talking about the subprime bubble and car loans for like a decade now. So I don't know.
Do you know my story? When I came back here a few years ago, I didn't bring a car. I was planning to buy one, but prices were so crazy. I literally waited 12 months. Like the cheap bastard I am. Yeah.
Wow.
Didn't have a car. I was Ubering around and it was great. I kind of missed being driven around.
Yeah. All right. I didn't have a car for 3 weeks once, and that was brutal.
Dude,
brutal.
I went like a year. Yeah.
Okay. Workday had an analyst day yesterday where they lowered their subscription revenue growth outlook for the year. So that's why Workday is down about 10% this morning. What else was I watching? Johnson Controls, JCI, announced what appears to be a not insignificant cyber incident. They had an 8K out this morning. So
dude, keeps happening. It keeps happening. God, this was a hack?
Yep.
I don't know. Good business to be in. So whoever figures this out and can solve this for these Fortune 500 companies, right? That's who you want to own in the cybersecurity space. Somebody's got to help figure this out. This is a problem that's happening to all.
That's it. Yeah. So the AK, by the way, was very non-specific. So I have really no idea into the nature of the hack at all. But Stock is down this morning. JetBlue with an 8K out this morning. They said air traffic control and weather-related disruptions due to convective activity in the Northeast have had a greater than anticipated impact on the quarter. They lowered their cost per available seat mile, which is a metric that the airline industry uses for profitability. They lowered that to the low end of their previous guidance range, or they clarified it would be at the low end of their range. So I guess they're blaming weather for having lower revenue in the quarter. We do have a takeover this morning. Chico's, the apparel maker for women's goods and accessories, it's getting bought out for $1 billion. $7.60 is
How much for Chico's?
$1 billion.
Okay.
$7.60 is the takeover price. It's going private equity, Sycamore Partners, and then Accenture, ACN had earnings as well. It was earnings, it was a buyback, it was a dividend raise. Although they used the buyback and the dividend raise as juice because the report wasn't good. So that's why the stock is down this morning, because the actual report was bad. A lot of times you see companies raise their dividend and increase their buyback when they know they're going to have a bad report. So that's what's happening this morning in Accenture.
Good rundown.
I think that was it.
Yeah, no, that great rundown. Good stuff. I'll throw in Workday. Did you mention Workday?
Yeah. That's my big loser of the morning, down 12%.
And then look at this, just coming across this.
Wait, I think we have a Workday chart.
XPOF, Lululemon, and Exponential Fitness confirm ongoing retail partnership. I don't know what this XPOF is, but they must have called up Lulu and been like, "Hey, what the hell? What's with this Peloton news?" Because they the press release saying that they still have an ongoing partnership with this XPOF. I don't know.
Right. So the language in the Lulu Peloton release was interesting because it said that here I'll read it.
Could it be that there's like a Peloton guy on the Lulu board, or somebody's friends with somebody else? Hey, drop a nice PR for us. I'm trying to sell some stock. This thing's a disaster. I don't know.
Maybe. Peloton is or Lulu is the exclusive provider. I'm sorry. Peloton is the exclusive provider to Lulu. Lulu is the primary provider to Peloton. So, yeah.
Cool. All right.
Different language there. Okay. Anyway, 9:28. That's about it as far as pre-market news. We didn't talk about yesterday because the thing, Amazon. Hello. Getting sued by the FTC. Interesting timing on that, because did you all see the article over the weekend about that hedge fund that has made bank by betting against the FTC, but they would lose all their cases?
I did see that article. I didn't read it, but I'm aware of the situation. The FTC is a joke, man. They can't.
The FTC. I got to give the market credit here, because the market didn't really react all that much, because this has been a known thing. We all knew Amazon was gonna get sued by the FTC one of these days. They've been prepping this case for years. They've been talking about it.
What is her name? Lisa Khan? Yeah. Everybody hates her.
Like that.
Doing a terrible job. Hedge funds are making money off it. Good for them. I would just ignore so much of this stuff. Rachel, if you say government shutdown again, we're going to kick you out of the chat.
Maybe my favorite part of yesterday's summit was when Ryan Dietrich said, "Government shutdown, basically who cares?" I was like, yes.
I wish I heard it.
Well, he didn't say it like that, but that was the gist, was don't care about that. And I said, say no more.
They'll figure it out. They always do. So
yes, we did talk about Costco on yesterday's. The three of us had a session in the morning yesterday. We talked about Costco a little bit. By the way, I learned that more than half of Costco's net income, I believe net income, comes from their membership fees, because they sell everything at cost. Basically, they make no money from selling the goods, because they sell it all at cost. So their membership fees are where it's at for them. So good for Costco. I love Costco. Huge fan.
Because unlike 99% of retailers, Peloton tried it, they failed miserably. Costco is in the subscription revenue business, and that is why their chart looks a lot different than a lot of these other retailers. Sticky sales, right? And so they're basically saying, hey, we can sell these things at cost. We just want memberships. We want to get people into our store. It's the Amazon model.
Yep. There's our opening bell. Very mixed today. Very, very mixed. A lot of green, a lot of red.
I need an Exxon chart. So I love to just simply scan for new highs in ugly tapes, right? Or corrective markets. One new high yesterday, I guess two, Jacobs Engineering, but that one's not as exciting. That's just a 52-week high. Check out this ExxonMobil chart. Do we have a chart?
Working on it.
Okay. 2 minutes. ExxonMobil just ripping higher here, leading the way. Looks better than Chevron these days. But those are the two big boys, Exxon, Chevron, at least for the U.S. in the O&G space. I mean, this chart looks great. Exxon ran straight up. It's been going sideways since February. Now taking out those pivot highs. Let's go. This one looks ready. I think, if you're just an average investor, not over invested in this commodities theme, just make sure you have some Chevron or Exxon or ConocoPhillips, one of the big boys in your portfolio. They're diversified. They'll pay you a nice yield. They're growing these yields, heaps and bounds lately. All good things. We're talking about these reversal patterns. We're talking about $100 oil. These executives are coming on saying super bullish things about, the bull market in energy, specifically for oil and gas. What's wrong with Exxon? No longer a Dow stock.
My only concern, and I've been hesitant to pull the trigger just because all it takes is one headline to just say, because remember, all this performance is coming off the backs of pretty significant oil cuts, right? Cuts in Russia, cuts in Saudi Arabia. Yeah. All it takes is one headline and said, "Oh, we're gonna release more oil," right? I feel like, I don't know. Maybe I'm just overthinking it, and I should just.
Are you one of these SPR guys? You're talking about?
No. Well, I mean, it's there, isn't it? So
why would we do that though? I don't understand.
Well, because high oil prices is a political issue, right?
So you're saying this is a way fiscally, I guess, right? Or that who controls this? The executive branch of the government controls the SPR, I believe.
Yeah,
right?
Yeah.
So they could literally go in and fight inflation and tame inflation themselves, is what you're saying.
They could try to. I don't know if they would, but they would try. Or I don't know if they could, but they could definitely try to. Right?
And that's actually an interesting thought, right? Because I know we're talking a lot about CPI and inflation and the different components of it, and I'm over here saying things like, "Hey, services and real estate might be moving lower, but then commodities and food might be moving higher." Maybe that is a good tool, right? To come in and kind of just stifle the inflation for commodities by hitting energy contracts, and then letting the other components like real estate and services do their own thing, right? Because if you hike to fight energy, you could cripple real estate, right? They're in a weird spot. Think about if real estate really starts rolling here, okay? The Fed is going to be.
Wait, but something would have to happen first for that to happen. You
don't think real estate's going? As soon as the job market really starts to loosen meaningfully,
no, rates would have to come down. That's step one. Then real estate.
But what if gasoline and crude oil and energy contracts are ripping? You're saying inflation has to come down. I'm saying it might be coming down in real estate and property values, but still surging higher with commodities. What do you do if you're the Fed? Which one do you do you support real estate or do you fight commodity prices? I don't know.
That is a good question.
More questions than answers as usual here, Spencer.
Yeah. And look, it was a big deal. What was it? Was it a year ago now when the Saudis and the Russians announced their cuts? Maybe no, it was more than that. And for, all it takes is one meeting where they decide, okay, that was enough of that.
We talk so much about OPEC and Saudi Arabia and Russia. Let me tell you, United States is an oil and gas powerhouse. Okay?
Aren't we the second or third largest provider of oil in the world?
I think we're the largest.
Are we the largest? I don't know.
We are a beast when it comes to oil and gas, and it seems like we're beefing up again. So not all about OPEC anymore.
OPEC plus,
yeah. Sir.
OPEC is so last century.
Let's bring Sean on, and I want him to tell this story about why we're YOLOing in the options market.
Yeah, what's that? Before we do that, do you want to do hot corner? Was there anything in there? No.
I don't-
All right. Let's bring Sean on. He was like messaging these guys yesterday in the middle of the chart summit, saying, "I have a trade. I have a trade." So let's bring him on right now. Options Sean Mclaughlin.
Good morning, boys.
Hey! Why is my screen like that? That's weird.
Wait, we lost
Hey!
Strazza? Where'd Strazza go?
He comes and goes. You know, that's what happens.
There he is.
JC yells at me when I blow my nose on camera,
For good
Actually
reason.
does.
For good reason.
so I try to hide myself.
Anyway, hey, great job yesterday with the chart summit. Everyone involved, well done. Lots of great stuff shared yesterday. I had a little bit of a
Well, thanks for starting us off, Sean.
Oh yeah, you're welcome.
Nailed it. Another chart summit in the books.
Yeah, it was an interesting day to have the chart summit yesterday. A bit of a fast market going on, and as you alluded to, such a fast market that I couldn't wait for JC to get off of whatever he was doing. I was hitting him back channel. I'm like, hey, dude, I'm selling Berkshire puts here, man. This is the spot. Here we are. We got to do this.
JC could never let you sell Berkshire puts alone.
I know.
He just loves that move so much.
No, it's fun. It's funny you say that because as I was putting the trade on, I was like not even thinking about letting him know until later because I knew he was busy. But I was like, oh, he'll be so pissed if he knows that I put this trade on and didn't tell him.
Yeah, he would have been mad at you. Sure. All right, so tell us what contracts and what is the logic behind this move, this trade.
So we joke around here a lot, me and JC, about how every time the market gets a little wobbly and people get a little scared and the VIX starts to spike, it's like it's almost always, at least it has been in the past 2-3 years, it has always been a great time to sell puts in Berkshire Hathaway. And I mean, I hate to beat a dead horse because one of these times we're going to be wrong, but it keeps working. And maybe this is the time it doesn't work. I don't know. But yesterday, at the time that I was putting the trade on, and then I messaged JC, Berkshire was trading about, I don't know, right around 355, kind of where this chart is right now. This is a chart from yesterday, by the way. Actually, this is a chart that Alfonso made for me on the fly in the moment. So this is not even that red candle that you see there. That's not even the completed day. That's like middle of the day, right when I put the trade on. That's exactly how it looked. And I decided to sell the November 3rd weekly 350 puts. Now, the reason why I did the weeklies, and I don't do weeklies very often on these types of trades. The reason is because Berkshire Hathaway actually announces earnings on November 3rd, on that expiration day. And I don't want to be holding naked short anything heading into an earnings event. So normally I would sell the regular November monthly options. But to do so, I would have to, I'd be exposed to that earnings event risk. But instead, we sold the November 3rd weekly options. They have, what do they have? 36 days until expiration. That's plenty of time.
Yeah.
And I sold those 350 puts for $5, $5 even. Now, did I know that the market was going to have a screaming rebound in the afternoon yesterday when I put this trade on? No, of course not. In fact, I thought we were going to go a little bit lower still. But the timing of our trade, knock on wood, couldn't have been more perfect. But we still have a lot of time for this to play out. This thing could totally turn around on us. Many professional traders will tell you this, and I believe it as well. Every trade I put on, I assume I'm wrong. And that's why I have risk management in place. So
you saw the VIX hitting its highest level since May. You saw these potential tops, the S&P hitting its lowest level since early June, right? And you're thinking, okay, let's fade this.
Yeah, VIX was getting, it nudged up against 20, which we hadn't seen 20 in a while. And this is another thing we've talked about recently is that there's a lot of people that, have been pointing to the VIX and the teens being, it's so low. It's the lowest it's been. Volatility is so cheap. But actually, volatility was in a weird place for the last 3 years. Who knows? I mean, there's lots of theories out there why it was, but the long-term historical range for VIX is generally 12 on the low end and 20 on the high end. And those are kind of the rails that people use to determine if we're in a, very dangerous or scary market, or if we're in a, calm market. So if we're down by 12, markets are generally in a bull market. Markets are generally, just cruising along. Everything's fine. If VIX is at 20 or above, 20 is kind of the line in the sand of, okay, it's time to take risk off. Things are getting a little scary out there. There's headline risk. There's government risk. Who knows? Whatever it is. So the VIX is just now back in its normal long-term range. At least the range has been in through most of my career. So when I saw VIX getting up to 20 yesterday, I was like, okay, this feels like maybe we're peaking out, at least in the short term. I'm not saying that this stock market correction that we're in is over. I'm not making that call. I'm not ready to make that call yet. But if you're gonna bet on a name kind of holding put a little bit, Berkshire's that name. At least has been for us.
Yeah, it's a great one to sell puts in. You mentioned their earnings. I'll just throw it out that they do something that's really unique with their earnings reports, right? Because your options expire on Friday, and you're telling me Berkshire reports? Yes, Berkshire reports after the market on Fridays, and they give you all weekend to read through their massive report and figure it out, because they don't want that crazy volatility, right? Other stocks don't do that. Spencer, any other companies that come out and report after the market on a Friday? I mean,
what's funny about that is that, for most any other company, if you heard that they were going to announce earnings on a Friday after the market closed, you would assume they're doing that because they got something shady to disclose, and they know nobody's going to be watching.
Yep.
But Berkshire's not that company. They never have been that company.
They do what they want, and I love it. Good for them.
Yeah.
Yeah. They're the only ones that I can think of that do it on the weekend. And then Carnival is the only one I can think of that will release their earnings during market hours, at 9:30. They'll release their earnings.
I mean, there's an old Wall Street saw that if you have bad news to report it on Friday after the market closes.
Yep.
Do you guys want to talk about these energy stocks? Is ExxonMobil? Are we long ExxonMobil through options? Or no?
I am not, but I am long Chevron, which is doing well. We've been long Chevron for a long time. We got into a leap in Chevron over a year ago. Right. It expires this January, so we're starting to get there. But it's been doing well for us.
I'm marking up some energy charts quick. I want to throw up the ExxonMobil because we're sitting here asking ourselves, hey, is this range in XLE or other energy indexes, are these ranges going to finally resolve higher? I'll show you the ranges I'm talking about. You got a big range when you zoom all the way out. This is large cap energy. And then you got a smaller range. Just drop the chart in the Slack. You zoom in, show a daily of XLE. We've had 1, 2, 3, 4 touches, these range highs. When you ask yourself, hey, is this index going to go, right, and break out? What we do is we drill beneath the surface and we look at the components of the index. And as more and more of them start to go, then yeah, the index is going to follow. If you throw up ExxonMobil, Exxon, which is probably the largest, maybe second largest holding, ExxonMobil, would have marked it up a little bit differently to show those range highs. But we are now eclipsing those pivot highs, breaking out of this range. I think XLE maybe follows. I thought Ian's presentation yesterday was a real rainmaker, talking about the most important theme in markets right now. Hey, guys, if you're worried about interest rates breaking out and you're worried about a higher dollar and you think your growth stocks or your tech stocks are in trouble, I have a solution for you. Get long the oil and gas. Get long coal. Get long nuclear. There are pockets of strength. They are working. It is a huge theme, right? It's commodities. JC does his little bit about how there used to be 3 asset classes. It's not just stocks and bonds. We forgot about commodities. And he's so right. And I think ExxonMobil is just an excellent vehicle. Like you said, Sean, we're in Chevron, just as good. They kind of trade places. One leads, then another one leads. Chevron was leading, earlier in the cycle. Now we're seeing Exxon kind of pick it up, but they're not going to move in opposite directions.
No,
right?
I always have a mixed emotion about making money on the long side in oil stocks, because as nice as it is to win on a long trade, it also means that gas prices are going up for the consumer, and that hits home a little bit more than most other trades, right? Like when we make money in a trade in, say, Microsoft, that doesn't mean anything other than we just made money in Microsoft. But when we're making money on the long trade in oil, that means, that's bad for the economy in many cases.
So I saw this.
As you guys say that, Kimmy is shorting Valero. Just putting that out there.
Go,
So
Kimmy.
G of her. So this Jimmy Butler thing that JC brought up yesterday was on the nightly news yesterday. There were, oh, I swear. And Rose is sitting there like, "Hey, Jimmy Butler," because we go to the Heat games, and I'm like, "Yeah, we talked about this on the morning show. It was on NBC last night." But Jimmy Butler it cost him like $150 to fill up his Bugatti, and he's like complaining about it on social media. I don't know if that's the most.
Dude, don't you remember when Hummers were big and Escalades were like a big thing, and we had $4 gas, and people were like freaking out.
And nobody felt bad for him.
Well, that's true. But I just remember that being on we used to watch, the news like at dinner as a family, and like every night it was oil every single night. It's like a year and a half, man.
Wait a second. I'm trying to imagine Spencer and his family sitting around the table watching the nightly news. It's like that scene in Anchorman. Everyone's watching the news.
World News Tonight with Peter Jennings. Oh yeah, like 20 years ago.
Yeah, I was gonna say I was in middle school or high school when this was going on.
Oh yeah,
long time. And hey, this is how commodity cycles work, right? They're long. Right. They go on forever, and I think this one's probably just getting started. So get ready for more of these, news headlines about higher gas prices, and then pay attention to how the Fed is planning to react to this, because it's going to matter for your portfolios.
It's true.
Put up the dirty versus clean energy ratio.
Oh yeah, we have that.
What do you call that?
I just saw it.
Did you say the dirty verse?
Hey, it's a bull market for the dirty stuff, guys.
I like that. The dirty verse. That's the first time I've heard that.
We're just looking at oil and gas relative to, I think in this one, it's the iShares Clean Energy, ICLN, but you could do XOP, TAN, you know what I mean? You could do this in a million different ways. We used to do like a custom one where we would do coal, nuclear, oil and gas versus solar, wind, whatever. The point is, the alternative stuff that everybody promised you was going to be the future, well, the future ain't here yet, if that's the case, right? It's still oil and gas. The narrative is shifting. People are coming around to being okay with nuclear again, which I think is incredible. And there's just a secular theme there that is worth getting behind for a long time. And then there's coal, which everybody hates it. But are there stronger stocks right now? You got coal and you got uranium. Take your pick. But those have been the best groups since July now, by far.
10 is a remarkable ETF in just how cyclical it is. There have been, and I've
remarkably bad.
Well, no. There have been several years in the last decade where 10 has been like the best performing ETF, the best performing non-leverage ETF for that year.
ARC too.
I think 2013 it was amazing. 2020 was amazing. There's been a few more because I've been looking at this stuff for a while. Years where 10 is just the best, and other years where it's been the worst. But obviously, the long term chart speaks for itself. Obviously, what's the all time high? $300, and it's 51 here this morning. So it's bad, but it's just when it's good, right?
Yeah,
and then of course,
what is typically the catalyst for when it's good?
I don't know. Higher oil. Higher energy.
Government subsidies.
Oil.
These companies can't stand alone and have never been able to. They're still not viable businesses. The models don't work. These companies are huge speculative growth plays that rely heavily on government subsidies.
If you look at just overall 5-year returns for non-leverage ETFs, TAN is the fourth best performing ETF over the last 5 years.
Where's ARC on that list?
Again, this is overall returns, not annual.
And if you did it 3 years, it would easily be Explorers.
ARC is not even on the top. What is this? Top 25? ARC is not on the top 25.
I don't know what kind of universe you have over there.
I have a universe of every single ETF. Doesn't have leverage.
He's got no dirty verse. That's
talk to the analyst team. They'll help you fix your universe. All right. What else we got to talk about here? Let's move on. Enough. This is not enough of this dirty talk. Let's talk about something clean, something nice.
Strazza, nobody tunes in to hear you talk about something clean.
So many mentions of coal yesterday. I just Can't even take it. Makes me sick. Dirty stocks.
Yeah, Rachel, Q Clean and iClean. I almost bought iClean once. I didn't, thankfully. But actually, Q Clean. Wow, I didn't realize how well that thing did.
When they start delisting these things, talk to me. Maybe I'll be interested in buying solar stocks then.
Yeah, right. I don't know, you guys. We can do chart report. We can do hot corner. We didn't do either of those today. Chart report was literally 50% SPY charts.
SPY charts. All right, throw them up.
SPY.
Let's see how different people are drawing these tops. That's fun. That's interesting. I haven't looked at it yet. We were busy yesterday. Let's look at these SPY charts.
All right. I'm not going to bring up the bumper because it's far away from me right now. So let's just bring up the. All right.
Let's make our own bumper.
I'll do it. It'll just take me 10 seconds to get it because.
Come on, Strazza and I will do a little dance. It'll be great.
How about how good of a job Spencer did yesterday, just running the show over there? Hey.
All right. Thank you. Appreciate
that. Great job, buddy.
This was the chart of the day from David Rath.
Hammer time. I had my hammer pants on yesterday.
All right. So ignore the trend line because it's not valid. There's only one touch.
How much do you hate trend lines, by the way, Strazza?
Listen, I hate them, but that's just not how you draw them, right? I mean, it's just connecting 2 points on the chart. It's not a trend line. So you see the RSI 14 in the lower pane almost getting oversold. I believe that's a 200-day moving average he has on the chart. What you really want to pay attention to here is the second rectangle. That would be the neckline of a short-term top. So I'm on board with that one. What else we got?
What else we got? Let's scroll. Don't need that. Here we go.
So a VWAP from, Brian had these VWAPs marked this way also. We can flip back to my SPY chart with all the VWAPs. Listen, it's not just this one VWAP. There's not just like one most important VWAP. Go throw up my VWAP chart quick. We'll flip back to the chart report. Just want to make a point here. We hear all about this 430 level at the August highs or 4,300 and then 4,200 or 4,150 beneath it. Not only is there a shelf of pivot highs down at the 4,100 level, but the AVWAP from the cycle high and the cycle lows come into play. In the fainter blue lines, I have AVWAPs from the pivot lows late last year and in, I think, March of this year, which is how Michael had his drawn. So a whole cluster of interest coming into play here. I think 410 on SPYs, 4,100 on SPX, that's the last line of support. If we blast through that last AVWAP from the lows, comes in around 410, I don't know. I think odds are very high that we do a full retrace, and we'll be talking very differently about the broader market if that's the case, right? So let's see.
This one's from Tyler Lovinggood, just with moving averages.
Percentage of stocks above 50 and 200. Is that it? What am I looking?
Moving, yes, yeah, moving average breadth was percentage above the 20-day and above the 50-day.
Yeah, so we also have that quad paned breadth chart. I don't know if Fonz can find it, but we talked about it on our breadth panel, right? We are getting confirmation from these internal indicators, whether it's percentage of stocks above 200, percentage of stocks above the 50, or the AD line itself, making new lows, taking out those summer pivot lows, confirming the price action at the index level in the S&P 500. Don't love to see that.
All right, this was the Russell 3000. That's not the S&P 500. Actually, I think that may have been. Here's one more S&P chart. Okay.
Pullbacks to this 6-month moving average. That's a new one. Okay. I don't know. I can't read the study.
That's precisely 1/2 year, Strazza.
Yeah, right.
All right. That was fun.
Yeah, you can do this a lot of different ways. The point is the markets have been correcting, and it seems like momentum is only picking up to the downside as these short-term patterns complete. Again, I'll continue to say they can come out and reverse it, but they have to do it like now. Look at the NASDAQ today. Look at XLK today. I think you really need to see green candles there, right? Because you got the shake. If it's going to be a shake and go, it's got to go like right away. You got the shake earlier this week. It's got to reverse it. I think the way we close out this week is absolutely huge. Do we have any like economic data or headlines or news
today?
Potentially move the market today or tomorrow?
Yeah, today we had our final GDP reading from which is not to me not relevant. We had non-farm payrolls, which to me is not relevant. So, no. But next week we do. It's a new month, so we get a jobs number.
But that's not next week.
That is next week,
but not tomorrow. I mean,
no.
We're not talking about the farms. We're talking about the not farms.
The not farms. Wait, one more S&P chart. This is from Callie Cox. This was interesting.
Callie.
This could be the first sell-off since 2005 in which the S&P falls this much and the VIX does not break 20.
Oh, it came. It was a long way from 20. It's moved a lot.
Right.
Yeah.
Right.
All right.
It kissed it.
Anyway,
it got real close. Real close.
She's great with the stats.
Okay.
Funny chat. Strazza sounds like a big time Dem. Absolutely apolitical. These things don't.
What does a small time Dem sound like?
I don't even know. I don't even know what that means. I pay zero attention. It doesn't cross my mind. It's a waste of time and energy for me.
When it comes to politics, I like to tell people I'm an equal opportunity hater of both sides.
I mean,
that's a good way to live.
They all suck. So nope, not a huge Dem. All right.
Could that be why you're in Key West? Just like you're on an island time.
Dude, I tried to get as far away from all of it as I could. I went as far south as I could go. The next stop would be Cuba. So
don't want to go there.
Right.
All right. Let's do a recess. Okay, so yesterday, when we sent out our email for the Chart Summit at night, thanking everyone for attending, we included a brief survey. And one of the questions in the survey was, where should we have the next in-person Chart Summit? If you haven't seen the email or responded, you still can. But I want to read some of the responses we got for where should the next in-person Chart Summit be.
We already know where it's going to be.
Well, it never hurts to ask. Okay. So one person responds USA. Thank you. That's helpful. Here we go. London, Miami, Annapolis, Maryland. Not the worst idea I've ever heard. I like Annapolis. Great town.
Beautiful.
San Diego. We have one for Puerto Rico, Scottsdale, Vegas. Those are
and
Newport
Vegas.
Beach.
We'll never do that.
Newport Beach?
Okay. Newport Beach and the same person said Newport Beach, Dallas, and Orlando. So I guess one of those.
Scottsdale is interesting.
I could do Scottsdale.
Scottsdale's interesting.
Actually, I like the Annapolis one. Annapolis, only because I've never been there. I'm very curious about Annapolis.
What about
and here's one I've never heard of: Westlake Village, California. I don't know where that is.
No, we're not going to some sketchy random town in California. That's for sure. How about like Tahoe or something though? Wouldn't that be cool?
Yeah.
Right?
No, I've never been to Tahoe. That would be cool.
Yeah, me either. So
Annapolis is great though. Annapolis is a great town if you haven't.
We could do like Jackson Hole and do like a mock Jackson Hole symposium, a Chart Summit. That would be cool.
Nick says he'll host us in Scottsdale.
Yeah, Scottsdale's cool, man.
All right, Nick, we're coming to your house.
Scottsdale's nice.
Some good goal.
Scottsdale's nice.
Listen, I get. How many votes did we get for Miami?
How many do you get from Miami? 1, 2. Well, there hasn't been that many responses yet because the email went out late. So, so far we've had 2 for Miami and 3 for New York, and those are the leaders.
Miami is a very practical option. So, if you guys want it, push for it. We can make that happen. But I think it's going to be,
practical for who? For you?
Me and JC would get behind Miami a lot easier than we would get behind other cities. So that might be a difference maker.
And then I know in past years you guys have done the Chart Summit on weekends, right? This is the first year you did it on a weekday. So I asked, when do you prefer it? Weekdays, weekends, or you don't care? Extremely inconclusive. 18% prefer weekends, 36% prefer weekdays, 45% don't care. So
yeah, I don't care.
Nothing to take away from that. If you do want to respond though, the survey was sent out in the email last night. If you haven't gotten that or you haven't signed up, go to chartsummit.com, register. You'll get the survey. You'll get all that. And then you can watch all the stuff. By the way, I want to mention Ari Wald's segment is on YouTube. It's on our channel. Maybe I should redirect. Why don't I do that? Why don't I redirect this stream to Ari's segment right now? So when we end here, it'll just autoplay to Ari's thing. Do either of you guys have any recess?
I'm just so excited for the Ryder Cup.
I came across a random sighting of somebody in our community last night in a very, very great place. My wife and I both, excuse the phrase, we popped our cherries last night going to our very first country rock concert. I'm a big music fan. You guys know this. I've seen every kind of music, but I've never really been to a true country band show.
Garth Brooks?
No, not Garth Brooks. We went to see a band called Blackberry Smoke. If you heard of them, they're a band based. They're from Atlanta.
Okay.
And they've been around a long time. They got like 12 albums or something, but they're new to us. And went to see them last night, and we're hanging out down low. We're real close to the stage. Show's about to start, and I get a tap on my left shoulder coming up from behind me.
Who is it?
Our friend Jason Krutsky from Trendspider.
No shit.
Nice.
So was this a Red Rocks thing? Where were you?
No, this was at a theater in Boulder, downtown Boulder.
And he's in Boulder, Jason?
He lives near Boulder, yep.
That's
and
awesome.
He spotted me in the wild. We hung out, and man, he had some great stories. Turns out, I don't know if you guys know this about Jason, but he, in a past life, he used to be a rock star. He used to play in a band. And he'd been on tour with this band that we were seeing last night, and he knew all the guys, and he had like a VIP pass, and he was like Mr. Big Shot. It was fun.
Wow.
That's awesome.
Nice.
Shout out Trendspider.
Yeah, right on Trendspider.
All right, I just dropped the link to Ari's presentation in the chat, so that's where you can find it. Busy day for us here on the channel. We have the Hot Corner coming up at 11 a.m. Eastern Time. That's with Strazza. We'll have the Options Jam session with Sean at noon. Chart request live at 1 o'clock. So a lot going on today. Stay tuned for that. Thanks to our guest, Jeff Hirsch. Thanks to Kimmy. Thanks to Sean. Thanks to all of you in the chat. As always, smash that like button. Hit that thumbs up. I'd appreciate that. And catch you guys later. Go make some money.
Be sure to tune in tomorrow. We have a great interview. I'm so excited. We got Meb Faber on the show tomorrow, so don't miss it.
Maybe I'll start announcing who the guest is on the next day. So yeah, Meb Faber on tomorrow's show. Big one.
Isn't he a big Broncos fan? You could talk some smack about that Dolphins game last week.
Huge. You're right. Yeah. Big Denver guy. All right. Can't wait. And then Brian Shannon Monday. So it's going to be good, guys. Bye.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah. Hit the ground, then it go off. Yeah. I can't take no loss. I don't even know what it costs.